to the 5th demo day for Uniswap Hook Incubator. Very excited to show off all the projects that we're excited to present today, or the teams that will be presenting today. The agenda for this call, we're going to give a quick high level of what is the Hook Incubator, what have the devs been building this whole time. Devin, who provided the grant from Uniswap Foundation to create the incubator, will share a few words about what she's excited about in this space. Then we'll talk more about what the Hookathon actually was, the kind of structure of it, where you can find all the projects in the Hook directory, the partners that are involved in this project. Then we'll get into the presentation. So we'll get into this pretty quickly, maybe 10, 15 minutes into it. And then that's the main focus. And then we will do a live prize reveal, and we'll share the actual announcements on social immediately after too. So the Uniswap Hook Incubator, this is the 5th cohort, as I said earlier. It was created a couple years ago when V4 was on testnet, and we wanted to create a place where people can experiment and test and kind of map out the design space for what is possible with V4. What are the kinds of hooks? And we're really excited to see what devs have kind of been able to build over the past few cohorts. And in this cohort in particular, we had 172 Solidity developers start the program, experienced, have written code before, they're not new to Web3. 110 of them got all the way through week 6 and started the Hookathon. About 89 of them ended up completing and shipping a capstone project, and $50,000 plus in total prizes will be awarded to them. So we're very excited about the impact of this cohort. And again, this is still the start of this journey. Now, what happens beyond this, which we'll get into later. Actually, I'll get into this slide. So I want to celebrate where we're at now. So congratulations to everyone who's made it this far. Anyone who's in the room right now that graduated, anyone who's watching the recording. 2 months of learning about a brand new primitive is a daunting task, especially when it's 10 hours a week and you're learning new things. And so I'm very proud of everyone who's made it this far. And next week, expect a few things. So expect a certificate that's personalized to what you built, and something that you can mint directly. Expect swag delivered to you. We'll send you an email if you, again, graduated, completed a hook, about claiming this as well. And then beyond that, there's a lot of kind of various programs that we do after teams go through UHI, and we work closely with the foundation on this. So there's an ambassador program, there's a security fund, there's a marketplace for auditing, and there are new programs that we're actually working with to help people with adoption, helping people reach their first and kind of primary adoption milestone to get to the next step in their journey. So your journey doesn't end here now. Keep building on your hook. Keep sharing your progress updates with us. There's going to be an alumni channel on Telegram that will give you invites to. So stay tuned for all that, more next week. And a couple other things I want to flag before we hand off to Devin. There also, we are organized, we join events that Uniswap Foundation does. There's events all over the world. Obviously, there's EthCC right now, but last week there was Unichain Build Week, and we were really excited to participate and see lots of UHI graduates, but also people who are going to join future cohorts, participate and learn kind of hands-on tactics on how to get your first users, how to build a go-to-market plan, how to think about fundraising. And these are the kind of ways that will continue to invest in teams. So excited to continue working with everyone beyond this incubator. And I think that's also a good segue to Devin. So Devin, if you're in
I'm here.
Great.
Thank
It'd
you.
be great if you can share, yeah, more of like kind of why Uniswap Foundation wanted to create like this hook incubator, why we partnered on building this, and what you've been excited about, and anything else you want to share.
Yeah, for sure. Well, first off, congratulations to everyone graduating. I'm very excited to see some of the presentations later today. I hope everyone has learned a lot over the last 2 to 3 months. I hope you've met really interesting, smart people. I hope you've had the opportunity to add a new skill set to your arsenal and think a little bit about the next era of DeFi. We partnered with Bomik and the Atrium team more than a year ago, I think a year and a half, or maybe even close to 2 years at this point, to build the Uniswap Hook Incubator because we knew we have such a uh such large goals for what V4 and hooks and the next era of DeFi can be. And we knew we needed to build an army. We knew we needed the right team to endow the next era of DeFi unicorns with the skills that they needed to continue to innovate and build protocols with better execution, better user experiences to onboard the next billion users. And so, as Bomik said, we work not only with Atrium Academy on the Uniswap Hook Incubator, but we have a number of other tools and resources and initiatives that you can use either as you continue to build your protocol, hook, whatever it may be. So the Security Audit Fund and builder events, which we continue to hone based on your feedback, as well as tools like the Open Zeppelin hook template library. We also have opportunities for folks who maybe don't necessarily want to build their own company, but want to contribute to the ecosystem. So we have our ambassador program, for instance, that Bomik met. And we've actually even, hired an ex Hook Incubator attendee to join our team. And he now works to help builders. Um, I'll call out, I am very excited because we set out to ensure that the next Uniswap, the next DeFi unicorn, the next crypto unicorn was built on V4 to ensure that the next era of DeFi was built using Uniswap. And we're already seeing that happen. One thing I'll call out is Euler Swap, which launched, I think, about a month ago, a little bit less than a month ago in alpha, no incentives. Yesterday was the fifth most highly used, was in the top 5 most used dexes on Ethereum. So a hook on V4 is the 5th most highly used DEX on Ethereum as of the last 24 hours. That is huge. That is wild. That is such, that is a very quick attainment of that goal. And we're excited to continue to support Euler Swap. But also we're excited to see other hooks built by maybe folks in this room hit that list of most actively used DEXs, most actively used DeFi tools built on Uniswap. So with that, I want to, leave everyone to the presentations, what we're all here to see. I'm excited to see them, and I'm excited to see many of you at our future events.
Thank you, Devin. That was awesome, inspiring, and great stats. Every time you give this, it's great how the progress that's being made every 3 months, and to hear new anecdotes each time. Okay, so let's talk more about the hackathon itself. It was 3 weeks long. Again, the culmination of a broader 2-month program. Devs had the opportunity to either build something in solo or team up with other people in the program. Lots of prizes. The goal was to ship a custom hook. In the program itself, Hardik teaches different concepts, dynamic fees, and like different categories of hooks. But the goal was to chip your own version. And during we'll get into the sponsored part later, but during the program, they had an opportunity to get inspired by lots of ideas that were shared based off like previous projects or ideas that our amazing sponsors, which I'll get into in a second, had too. So there's all kinds of support there. And then, yeah, the goal is we want to use the incubator as a way for people to experiment and iterate and test. And then for the people that are excited and want to keep building, we want to support you on that journey from here. So this is kind of this is the first step in that journey. All the projects that have been shipped in this Hookathon are available live, so anyone can see them. You can go to hooks.atrium.academy, and all the projects are available there. There's a filter for UHI5, so you can see specifically by them. And on their hook pages, there are links to GitHub repos, to slide decks, to answers to questions like what is the problem you're solving, what was your approach, how might do you want to extend the project. So if you want to see what everyone has built collectively, you're only able to see 10 projects today. Please check out the hooks directory. Again, hooks.atrium.academy, which we'll drop a link in the chat too. Okay, back to the amazing sponsors. So what's really great about hooks as a primitive is that there's all kinds of ways you can leverage different products and add custom logic to different points of a transaction. And so we have these sponsors who want to surface their technology to hook builders and help you build more complex projects and build towards your use cases. And it's been fun to work with these teams for this cohort. So I want to give a shout out to them, Eigenlayer, Ink, Circle, Across, and Flaunch. Each of them delivered a talk on what makes their technology great, why hook builders should build on it. We will share links to all the projects that were built by these sponsors, and also follow up over email with kind of links or other documentation. But I'm really honored to have these teams with us, and we're thankful for them for providing support too. In the 3 weeks during the program, the each of the teams were answering questions, and so it's been grateful to work. It's been great to work with them, and excited to work with many of them for future cohorts too. Okay, without further ado, let us jump in. Um, and I always have to do this. So legal disclaimer, everyone do your own research. So users are encouraged to review. Every project here is going to go through auditing if they want to continue and get through production. So remember, security is utmost important. That's why we do all these programs with the foundation to help lower the costs of auditing as well. So now we're going to jump into the presentations. Hardik is actually going to take over now as the MC, and he'll introduce the teams and maybe provide some commentary between them. And maybe before you do that, Hardik, if you want to say anything to the cohort themselves, since this is the last time you're talking to them as a group live.
Absolutely. Yeah, so, well, first of all, what Bomik said earlier, if you made it this far, the last 2 months have been fairly gruesome. I think it's a lot of time to put towards learning new primitives, and if I would say so, it's not easy to learn Uniswap before either. I think it's there's a lot of things to keep in mind and consider. So it's just first of all, congratulations for coming all the way here. And yeah, and like we'll we'll do prize announcements and presentations obviously next. So, but everyone who submitted, that is a big deal. And also, even if you don't win a prize today, you're more than welcome to come back for future incubators and future cohorts. So there's always something to keep in mind. I think we saw a lot of amazing projects. Judging was really hard to do. And yeah, I'm really excited to showcase these 10 projects today and also the prize announcements. And it's been an absolutely wonderful past 2 months getting to know all of you. And I hope to still see you around in future cohorts or something.
Amazing.
Cool.
Let's get started.
Cool. So yeah, so what I'm gonna do is I'm gonna announce people who are next up and also people who are on deck, so you can be ready. So first of all, we have Lily from Clanker starting present, and next up we'll have Vansh and Rahul from Front Run This. So you guys are on deck.
Nice. Can you guys see my screen?
Yep.
Awesome. Hi, I'm Lily from Clanker. I joined the Atrium cohort just because we're an existing protocol, but we wanted to upgrade from using Uniswap v3 to Uniswap v4. So during this cohort, I upgraded our decks. And yeah, I'm head of protocol at Clinker. During this presentation, I'm just going to give a quick overview of Clinker and then do like a demo of our hook. So what is Clinker? Clinker is a token launchpad on Base. We've been live for about 7 months. We've done around 3 billion in volume and have collected around 30 million fees that have been like shared amongst our whole ecosystem. And we're like a really small team of 5. I do most of the smart contracts at Clinker. Clinker is much more than just like a piece of code. We're more of like an ecosystem or a community. How Clinker works is that creators work with either us or our deployment partners to launch tokens. And then our code takes a portion of the launched token supply and puts it into like a Uniswap liquidity positions. And the trading fees from those liquidity positions are shared amongst all the people involved in the deployment process. And Clinker ourselves, we offer like different deployment methods. You can deploy through our bot on Farcaster, through our website, which I'm going to demo, or through our SDK. And a lot of our deployment partners either use our SDK or our API. We have been using Uniswap v3, but through Atrium, I designed our Uniswap v4 hooks, which I'll get into. Our Uniswap v4 hooks honestly don't do too much, but they do things that are really important to our users. Our users really wanted the option to customize their fees. So our hooks either allow our users to use static fees or dynamic fees. And then also our users are now able to specify which token they would like to claim as their fees. This is super important for our deployment partners who would like to not have to like sell meme points basically. So now they can like only take their fees in the pair token. And our creators, they're actually able to now do cool things like do automatic like buyback and burns for their tokens, which a lot of them just want to do for like, I guess like token longevity reasons. We also did some like MEV customizations, but those are like a little bit out of scope and aren't live yet. Cool. Now I'll show you guys like how to deploy our tokens. So this is our website. We work with a really nice design firm called like Opsis. And yeah, let's get into before. So as I mentioned, this is just like one of our deployment methods. Just token. This form is just like made as a way where users can like do like max like customization of their tokens, because beyond just like deploying a token, you're also able to like add custom metadata that's like surfaced on chain. Here you can see that we have like different like fee configurations. Like let's do a dynamic fee pool. Here, this is like where like we're able to specify like who receives the trading fees. So like as you can see, like my wallet was like automatically populated, but you can also like add different people to share fees with. Like our interface partners normally set like the creator as a fee recipient and then themselves as a fee recipient. In Clinker in v4, we're actually a protocol fee now instead of an LP fee. So it's as if like Uniswap turned on their protocol fee, we have a Clinker fee built into the DEX. And like we were like only able to do that with a v4. We also like do like custom like liquidity position management, as in like when we launch a token, we like allow creators to choose between like different liquidity distributions with a total of like 7 liquidity positions. Standard means meme, and a project means like if you're like an app coin or like a project coin. We also let people vault tokens beforehand if they want to reserve a portion of the supply for like investors. And then we also allow people to do like an initial like dev buy amount if you want to like purchase tokens before like snipers get the chance to. And yeah, it's actually pretty, that's all you have to do is like just fill out the information and then the token normally just like gets deployed. Cool. And then yeah, you can see that our token was just deployed. This is the address.
Lily, I think your screen share stopped for some reason.
Oh no. Okay, thank you.
Just at the very end.
Okay, I think the Uniswap like a pop-up made it angry. Let's see.
Damn, right before you show the CA.
I know.
Deal.
Cool. Okay, cool. Here we go. Can you guys see my screen?
Yep.
Yeah, so basically I'll just like, you can see that like my wallet like deployed this token. Like we have the little address. And now we can go trade it on the Uniswap like front ends. Basically, we finally got our what do you call it? Our hooks integrated like last week. And it took a while, but it was great. Oh no, it's not working. Okay, well, I thought it worked. It doesn't yet. Okay. But yeah, that's Clinker. We love Uniswap v4 because we've been able to customize our fees.
Amazing, absolutely amazing. I love seeing existing protocols integrate V4 and unlock new functionality for everybody involved in the process. I'm a big Clanker fan on Farcaster. I came across, I've been following sort of this for many months now. I don't even remember when you guys launched. It feels like so long ago, but amazing to see this. And this was actually news to me this morning. I didn't know this was going to be presented, so I love to see a familiar name over here. Amazing. Cool. Next up, we have Vanch and Rahul from Front Run This, and on deck is Diego from Debt Hook.
Hey guys. So yeah, I'll jump straight into it. Hi everyone. We're excited to introduce Front on This, MEV resistant trading layer that uses off-chain matching and encrypted order settlement. It's built on top of Uniswap v4 using eigenlayers AVS and EigenDA. We wanted to make sure trades don't get front run or sandwiched, something we've personally experienced. So we designed a system to make trading safer and fairer. We are a team of two. I'm Vansh, and this is Rahul. We've built across trading, prediction markets, cross-chain protocols, and MEV-aware tooling. What sparked this project was getting front on ourselves and realizing there's no easy way to opt out of this. So we said, why not build one?
Awesome. Awesome. So Frontend solves a critical problem in DeFi, which is sandwich attacks and front running. Instead of exposing every single trade on chain, we privately match orders and only reveal them during settlement via MEV protected bundles. This makes it extremely difficult for bots to manipulate the market. It gives off all trades, especially retail users and smaller protocols, better pricing without getting penalized. Now for architecture, we have four key components. The first one is the AVS matching, where orders are sent to our AVS on EigenLayer, where they are matched privately using consensus from staked operators. After that, matched matches are encrypted and posted to EigenDA, so they are hidden from the bots, but also available when needed. Then comes in our MEV protected settlement layer, where after a short delay, trades are revealed and settled via flashbots, bundles through multiple layers, and making sure they are included privately. Finally, our custom Uniswap v4 hook replaces AMM pricing with directly peer-to-peer settlement using Uniswap's infrastructure for token transfers while avoiding price impact. Everything is coordinated securely using staked validators, logic through our AVS.
Cool. Awesome, Rahul. So let me show you guys our demo and how our front end looks like. So as you can see here, when a user comes on a platform, they can either place a buy order or a sell order. But unlike traditional on-chain swaps, we don't process these orders immediately. Instead, we temporarily hold them off-chain and start collecting more orders from other users. This creates a batch, a group of buy-ins or orders that will be matched together. Why do we do this? So there are two key reasons why we thought of this. First, it hides individual trades from MEV bots, so they can't front run or sandwich any of these users. Secondly, it lets us match trades more efficiently, especially when orders naturally offset each other. Once this batch is ready, we generate a Merkle root. Think of it like a cryptographic fingerprint. It proves the contents of the batch without exposing the details. We then post this root on chain, which locks in the batch and serves as a public proof that it exists. Now, the most critical part is that we introduce a delay before executing anything. This short pause gives the system time to finalize the batch and ensures that no one, not even validators or bots, can use the information to their advantage. Once the delay ends, our custom Uniswap v4 kicks in. It takes the match trades from the batch and settles them all at once on chain with preset prices and quantities just as they were originally agreed. Because we're not relying on live AMM pricing, there is no slippage, no price manipulation, and certainly no MEV.
Great. So let me talk about what's next for front-end this. We want to enable cross-chain intents using a cross protocol, exploring multi-party computation and fully homomorphic encryption for deeper privacy as well. Also, we are working on adding intent-based routing infrastructure and launch pooled dark liquidity walls for passive LPs. Ultimately, we want to make private and fair trading the default experience in DeFi and build the infrastructure to support that. Thank you.
Thank you.
Amazing. Great integration of sort of Eigen with hooks and how it can come together. There's some inspiration, obviously, from coincidence of wants related topics, but sort of reworking that and positioning it into a MEV protection front running hook via private pools through Eigen ABS that was like pretty cool. Love to see that. Amazing. Okay, so next up we have Diego from Debt Hook, and on deck is Kevin from LP Hub.
Hello, everyone. How are you?
Good, good.
Okay, amazing. Let's see. I'm gonna do a quick run through the main product, and later I can explain what is happening behind the scenes, right? So here we have Debt Hook. The first thing I want you to notice is that we only have one pair. This is a debt protocol, a collateralized debt protocol for this pair only, ETH and USDC. So if you want to borrow USDC, you have to leave ETH as collateral, and you can also provide USDC and gain an interest rate on it. The main motivation for doing this debt hook was price discovery. So my main question is, okay, so how could we read the implicit rates by the market? And the first thing I noticed is that many of the DeFi protocols out there have perpetual rates or floating rates, but I wanted to find fixed rates that could imply a yield curve, as that is a fundamental part of finance. So here I'm playing with three loan maturities that could be 30 days, 90 days, or 180 days. And we can see the implicit rate by the market depending on the orders, right? So let's say I want to do 180 days. Here's the trading panel. So I want to lend, let's say 1,000 USD at market rate for 30 days. And I want to pay gas with USDC. In order to be able to pay gas with USDC, we implemented the paymaster, which makes sense because if you are someone who has USDC and you want to gain interest on USDC, you wouldn't want to have to sell some part of it to buy gas and then go back to the principal. So in this case, that's very useful, and we can create a lending offer. Maybe it has to reconnect. Okay, let's see if that was it. Let's try another one. 9 is okay, 30 days. You know how this goes. For some reason, it's not popping up the transaction. But well, let me go on and explain how this works. So as I said, we're using Uniswap before. We're using EigenLayer ABS and Circle Paymaster. So let's go through this. This is the flow. First, lenders and borrowers submit off-chain signed orders. And then we do order matching with coincidence of ones with EigenLayer. This is the way we are doing the price discovery or rate discovery for our market, right? So the fixed rates that are going to be determined by the coincidence of ones. Then we execute the loans, and then we do atomic liquidation. So what we mean by, okay, so let me go to this. I think we have two interesting innovations. One is using EigenLayer coincidence of ones to have implicit rates, and the second one is having all or nothing fair liquidations. Instead of doing like partial liquidations like other protocols do, what we're doing is that in case your collateral goes underwater, we sell all of it. And we sell it in the first transaction happening in the pool, even if it's not your transactions. So what this means is that we can leverage the pair being so common, making sure that liquidation happen at the moment that debt goes underwater. And it's fair in the sense that if we have any collateral remaining, we are gonna send it back to the owner. This is the best way to do it because we have clear payoffs for both lenders and borrowers. And I just want to tell you what would be next in the roadmap of this protocol. So we have the smart contracts, but I would like to do a lot of gas optimization and contract audits. I would like to have multi-collateral support later on, and maybe some of your projects also, like just-in-time liquidity or some sort of governance or dark pools that would be really interesting to put into the protocol. So if you like it, you can hit me up on my mail, which is in the Notion page, or on Discord, and I'll be happy to collaborate with you all. Thank you.
Amazing. I love the fact that V4 is kind of expanding like beyond just being a DEX. The usage for lending protocols, especially the fact that we now don't need centralized infrastructure or reliance on third parties and can do all of this in a permissionless, fair, and transparent way on chain. That's amazing that V4 can kind of enable that. Great work. Okay.
Thank you.
Next up, we have Next up, we have Kevin from LP Hub, and on deck is Miguel from Term Structure.
All right.
Hello, everyone.
I hope we have
and
Killian
thanks so much
as well.
for joining us. Oh, sorry. Thanks so much for joining us for this presentation today. My name is Killian. I'm a software engineer who's been involved in crypto for several years, made the transition to building Web3 this year.
Hi guys, my name is Kevin. I got a background in structured finance and working in DeFi quite a while. And I'm very happy to introduce LP Up today, which is our new product, where we're actually focusing on making LPs great at market making. So with that, let's dive right in and maybe quickly summarize on like what are the key problems LPs facing today, which is mostly adverse selection. So being on the wrong side of informed trades, causing impermanent loss, as we all know. And we are still mostly setting incorrect pricing, mostly the same pricing for all kind of scenarios. Inventory exposure is usually not managed well, alongside like LPs having struggles how to set the range properly, how to value tokens, when to time an exited position, and also like usually not capturing anything of the MEV. So what we built as part of UHI is our base layer hook, which is focusing on pre-order screening to detect basically healthy order flow and interact this while discouraging toxic order flow. And we do estimate pricing based on estimated impermanent loss to kind of protect LPs against especially these events. And alongside, we plan to capture arbitrage, protect our pool against stale pricing, and also set incentives for inventory rebalance. All of this is basically a part of a bigger vision to kind of like build a community of on-chain market makers where advanced LPs can build the strategies based on these features and then make it available for performance fee for passive investors to help scaling these pools, making it more attractive to token issuers to rely more on DEX liquidity instead of centralized market makers. So that's basically the first part of the hook, while Killian will tackle the second part. And it's like the first part of the hook is basically, say, the intelligence part. We focus mostly on 3 metrics. The first one to the top left is the probability of informed trading. So kind of like the likelihood of someone is taking advantage of you and having more information than you have. The second part is like estimating the impermanent loss on the back of like how deep is the liquidity currently in the pool measured by the liquidity ratio. And the last part is basically how prone is the pool to impermanent loss by basically measuring the inventory exposure. And based on that, we derive basically a risk-adjusted pricing and apply that per swap individually to be just more proper at pricing. We backtested this on an ETH-USDC pool, and what you can see is just that our pricing is way more nuanced over time, with basically staying competitively low, and it's like very, very competitive on these trades that we actually want to attract and that we want to win. We could go even lower than that. But on the other hand, penalizing these trades that really cause the impermanent loss for the LPs and either avoiding it, but just like being prohibitively high, or by actually charging and getting the LP properly compensated with that. So with that, I handed, oh no, sorry, we got 2 example cases actually for you to also show the logic a bit more. So like on the left-hand side, you see the high impact rate. On the right-hand side, you see a low impact rate. So where we have a pool with pretty stable liquidity, with being the ETH-USDC pool, you see how actually the fee adjusts based on a higher probability with a high price impact to charge a higher fee, while it charges a low and attractive fee to encourage stuff when it's really a low probability if someone's taking advantage with a low price impact. So now with that, I hand it over to Kilian for the arbitrage.
Thank you, Kevin. So how does our logic differ from a typical arbitrage for this after swap? So the first feature that got us so excited is, given the new V4 singleton architecture, we can actually capture arbs in any V4 pool within the same transaction as the original swap, including multi-hop arb swaps between other token pairs, which protects us somewhat from sandwich attacks and traditional arbitrage MEV that's caused. Secondly, we're also able to capture arbs that would otherwise be unprofitable to external arbitrageurs by offsetting the fees paid to ourselves in the pool. As you can see in this illustration here of this scenario, the external arbitrager has no opportunity to capture, but our internal self-arb can capture the small opportunity and rebalance the pool. This results in us rebalancing our pool more accurately and more often, making our pricing more competitive for the next swap. Lastly, we were able to calculate the exact arb size needed to rebalance both the pools to the same price with some clever maths, rather than using an incremental tactic that many arb bots employ. So we did this by utilizing this illiquidity ratio that Kevin touched on earlier, which effectively depicts the price impact per unit of volume. So we can estimate with decent accuracy the input amount into the first arb. And after quoting both the hook pool with this number and the external pool in the opposite direction, we can check the accuracy of the quote by comparing the final pool prices. And then the brilliant part of this technique is we then use an updated illiquidity ratio from the previous swaps to re-estimate this optimal input, leading to the pool prices converging on each quote iteration without swapping yet. So in most scenarios, we believe the final pool prices will be within a small threshold of equilibrium after about 3 iterations, at which point we execute and resolve the deltas for the transaction. So for any of the maths nerds, this is the formula that we use to estimate this arb input, where by substituting our known variables, which is price and the illiquidity in both pools, we boil this down to 2 quadratic formulas depending on the direction of the trade, solving for the input token represented by X or Y here.
All right, cool. Yeah, wrapping up, what's up next for us? So we intend to actually apply for one of these security grants, get our hooks deployed on L2s as well as on mainnet, and then launch our front end, which allows for pool deployment as well as for portfolio tracking. Whoever wants to use our hooks, we will probably provide some seed liquidity ourselves and just see to get other people encouraged as well. And then we plan to go next for the launch of the strategy so that actually advanced LPs can start building the product they want and also have a backtesting suite available. After that, we plan also to integrate hedging options and as well as insurance coverage. And then with that, basically the advanced tooling for advanced LPs should be ready. And then we start to explore passive investor options. I think that's it for us. So in case that's interesting, feel free to reach out. We're always happy to chat about stuff. Thanks.
Amazing.
Thank you very
Thank you
much.
so much. Sorry, Kilian, I didn't know you were going to present as well. Sorry for not introing you earlier, but absolutely
No, all
love
good.
this. This is such a nice way of doing dynamic fee computation here, and the self-arb approach. I think, especially in the world of L2s, we're moving to where gas fees and stuff is less of a concern. This is amazing, and also special shout out to these guys because their code is actually beautiful. Like, if you're interested in this kind of stuff and doing this on-chain math and looking at it, like their GitHub was so nice when I was judging. I love that. Okay,
Appreciate that.
I mean, it's still a proof of concept,
Thank you,
obviously.
sir.
It will change, but yeah, pretty good for what it is. Okay, next up,
Thanks, Art.
yeah, absolutely. We have Miguel from Term Structure, and on deck is Yash from Trade Battle.
Great. Can you see the screen?
Yep.
Okay, perfect. Well, welcome to our demo. We have named our protocol the Term Structure AMM, and it's a new type of AMM that is suited for trading bonds. And we built it entirely on top of Uniswap before and the Hedera open source project, the Asset Tokenization Studio. This is the team. I'm Roberto. I'm working as a product engineer at IO Builders, and here with me is my colleague Miguel.
Yeah, hello everyone. I worked as a blockchain developer at IO Builders, also in the innovation team. Several years of background in blockchain industry and especially in self-sovereign identity projects.
With us also participated Alberto, but he wasn't able to come to this meeting. Well, I'm gonna give now a bit of context about why we decided to implement this area. We think by using an AMM, we can overcome several limitations of the bonds market, such as the liquidity fragmentation, the opaque request for quote system, the high settlement delays, or the high inventory carrying cost. And by doing this, we can reduce the illiquidity inherent to bonds associated with the heterogeneity and their characteristics. And in AMMs, they provide constant liquidity at a publicly quoted price. In vanilla, the price is solely determined based on the traded volume and the direction of the trades, but this is not very well suited for bonds whose value is usually determined using some fair valuation formula, such as the discounted cash flow model. So we needed a way to shift from pricing discovery based on a sequence of complex actions that only relies on trades to one that also incorporates the fair value of the bond. We came up with the idea of setting the price based on a combination of two legs, the market dynamics leg and the fair valuation leg, resulting in a market with less friction, better price offerings, and a higher speed of settlement. So how does this model work? You were saying before you like some math. This is not very complex, but that we set the price at the beginning of each block based on both legs. The market dynamic leg is incorporated as the difference between the previous block closing price and the fair value in the current block. And then the fair value is incorporated using the discounted cash flow model. The sensitivity is what determines how much of the market dynamics leg we should include, and we increase it directly proportional to the previous block absolute delta in the price. If this delta is below a noise threshold, we just ignore it and we consider that it was noise in the market and reduce the sensitivity until it reaches normal levels. Since the last traders in a block will get a price with a higher accumulated noise, we decided to implement a dynamic fee to avoid the gas prices. And changing the price of the pool means we are rendering some of the funds idle, so we needed a way to compensate the LPs for this. We decided to rehypothecate the idle funds using yield farming strategies. And in order to minimize the time these funds are idle, we repay the LPs when they withdraw liquidity using those tokens in the vaults. And also we enable the LPs to provide single-sided liquidity. They just deposit one of the tokens and we withdraw the matching amount of that specified token from the vaults if there is enough liquidity available. This is how the rebalance will look like. In the image above, the liquidity of bonds USD is distributed evenly across the entire range. Then a swap USD bonds takes place, which increases the price of the bond. And then in the next block opening, we rebalance the pool, we decrease the price. That means we need to remove some of that additional USD. And then later, when a single-sided LP comes into the pool, we just redeposit the tokens back into the pool. The core components are these five. The Eigenlayer ABS provides the pool with an updated yield to maturity. The swaps can be routed through the pool manager. The Circle helps us with the compliance checks. And then the life cycle of the bond is managed using the Asset Tokenization Studio interface. And this is how the whole process looks like. When an issuer deploys a bond, they come to the pool, and then the whole primary market issuance takes place using the Asset Tokenization Studio interface. Then, once the subscription period finishes, they can launch the pool in the hook. At that moment, the secondary market is open for trading, and then users can swap through the pool manager or provide liquidity using our own interface. The ABS updates the pool fetching data such as macroeconomic data, bonds covenants, or all the credit rating, and based on that calculates the yield to maturity and pushes it into the pool. And then the Circle is used for the screening process. As soon as the user connects to the application, we inspect if the user is denied, in which case we add it to the control list in the ATS, and further interactions with the pool are restricted. Now Miguel is going to explain more a bit about the deliverable and the future work.
Yeah, thanks, Roberto. In this slide, we want to show you the main components that we have delivered in this hackathon. The tech stack is more or less represented in the diagram. So the core of the solution are the Hook smart contracts developed using Foundry and Uniswap Libs. We also use the Asset Tokenization Studio that's built on Hardhat and TypeScript. Then we have the Eigenlayer ABS that's that is also using Foundry and TypeScript. And finally, we have developed the CLI to showcase the whole solution that's using VM on top of and TypeScript. So here we also integrate the Circle API. And as I said, we have the CLI that can be used to demonstrate the functionality of the solution. And also we have written a white paper that deep dives into the details of the solution, and you can find it in the repository. Obviously, the solution is not complete. We have a lot of work to do in order to make it production ready. There are some tasks that we could need to do in order to complete our solution, such as backtesting the model, exploring further integrations, like, for example, using Circle Mint for the mass payments once the bond expires. Also, since our model does not purely rely on arbitrage-based price alignment, we would like to test deploying the pool on in networks that do not support PBS or MAB, like, for example, Hedera, where transaction ordering is not possible. The model is just first iteration, so it currently does not support neither concentrated LP positions nor coupon bonds. This could be also another extension. And yeah, I think that's all. We are very happy with the results of this hackathon, and we have learned a lot. We are looking forward to answer any questions or join any good this conversation. Thank you.
Thank you.
Thank you so much. This is so nice to see the custom pricing curve for bonds here is really well done. And I feel like, we talk about how crypto is going to replace TradFi rails and finance rails and stuff, but we're still lacking a lot of the tools and things that exist in TradFi. So seeing stuff like this actually work is pretty amazing. Obviously, it's a proof of concept and we'll continue working on it, but really, really well done. Congratulations, guys.
Thank you.
Cool. Next up, we have Yash from Trade Battle and Adwale and Kemi Ray on deck for Crab Swap.
Hello guys, I'm Yash and I'm presenting you Trade Battle. So what Trade Battle is it? So Trade Battles like transform any regular Uniswap trading into like a competitive gaming experience where users pay a minimal fee to join a daily tournament which happen at 24 hours every day. So they compete, like they swipe normally and they compete for the prizes, and the prize pool are the fee we collect from all the users based on their trading performance. All trading while normally going through the existing Uniswap interface. So what are the current problem in the DeFi trading? Like DeFi trading is pretty boring and isolated. You swipe tokens and leave. But the bigger problem is trust. How to run a fair competition like you can trust. So for that we have integrated Eigen EVS for a trust lab environment. So here you can see like there are zero community engagement, though no reason to stick around, and yeah, you swipe and leave it immediately. So what we present is like Trading Battle solves both problems. We create engaging communities, trading communities, and provide crypto economics security through EigenLayer. Our target users are active DeFi traders who want to competitive experience and new traders who need gamification to stay engaged. So what the flow is like, users pay a normal fee, for example, $10, and they join a daily competition, and they trade normally you do on Uniswap or any other platform for 24 hours. And after that, whatever the profit they have earned, we calculate and show it on the live leaderboard and rank them and distribute the price according to that. And here is the architecture, how architecture looks. So users join the competition. We tag all the hooks through a hook deployed on on Uniswap, then there is a eigenlayer operator AVS, which calculate all the score of each user. For example, Alice and Bob are the two players who plays here, so we calculate their score. So how the eigenlayer AVS works, there is a logic I have written which goes through the consensus mechanisms for the proof and extra safety. And then after the AVS part is done, it's reflected on the live leaderboards. And as soon as the competition ends, there is a after the competition, a prize will be settled to all the winners according to the rank. Yeah. So why we have like integrated eigen AVS? What's the need of the eigen AVS? So because like EigenLayer is like one of the first protocol which provide cryptoeconomic securities without running a node or having staking your Ethereum and anything. So that's why we have integrated Eigen AVS. So we can run multiple operators which calculate the score independently, and then through a consensus mechanism, which is currently set for 2/3 of the operator must agree on the current position, and after their all the price will be reflected. And also in future we are planning to introduce selection in that. So if any operator cheats, so they will lose their money. So that's how like fully trusted and automated system will look like. And yeah, for future roadmap, so this is just a POC and MVP thing. There is no front end right now, and there is only a backend developed. So first of all, we will be introducing our front end, so user can really swipe and can see the all the leaderboard and ranking. And after that, we will be introducing like multiple competition formats. Right now, there is only one profit and loss model, but there will be other competition formats like volume war and consistency balance and team battles. And after that, we are going to integrate a CCIP so we can like compete across all major chains supported right now. Yeah, that's all I have.
Amazing. Thank you so much. Love to see more gamification coming to this, and all the KOLs on Twitter selling paid Telegram groups better watch out, because now we have trustless verified data of their calls. Amazing. Love to see this. Thank you so much, Yash. Cool. Next up,
Thank you.
we have Adwali and Kemi from CrabSwap, and on deck is Sky for SkySwap.
All right, guys. Hi everyone. Can you see my screen? Hello.
Sky, you're next. It's gonna be CrabSwap right now.
Yes. Can you
Okay,
see my
sorry.
screen?
Perfect.
Sorry.
All right, sweet. Hi everyone. My name is Maiwa. I'm also first elder. I've been representing CrabSwap for my team. CrabSwap is literally cross-chain arbitrage, and we are all familiar with how arbitrage works currently. Arbitrage helps you to get the best price when you're trying to make a swap. The thing currently, ideal challenge right now is that this only works on a particular chain. So you can find the best price for a swap only on a particular chain. But with CrabSwap, we are trying to solve a problem that has always been existing by helping users get the best price across multiple chains. CrabSwap ultimately helps users to automatically helps users profit from different price across different blockchains, and we are making use of pipes to get the prices from different blockchain, making use of across to be able to bridge it instantaneously, and also make users get their tokens immediately. Why it matters? Bridging between chains is tricky. One of the current issues with bridges is that it's tricky. One, two, it's slow, and it's sometimes expensive. But with the advantage of across, right, we're able to find a way to circumnavigate all these issues and bring this idea into reality. If we look at the co-founder of MVO Index, I made a tweet recently talking about how there are opportunities in cross-chain arbitrage and how it would be really important if we could find such applications being deployed. And we can see an example in the ETH USDC pool where it showed the different price ranges for ETH. And we can find the lowest being on Unichain. And a user who wants to get ETH would prefer to get it at a lower price right on Unichain. And this is what CrabSwap is offering. If you want more information about the data, you can always find it in the source here. It has more charts like data to be able to see how price variations occurs across different chains per swap per pep. The core features we used literally was we used Pyth, like I said before, Pyth to get the prices across different chains. And then we use Across to bridge because Across is faster, Across is cheaper. Across is faster because they use relayers. So it was really, really helpful. And this is how the architecture really looks like. The user initiates a swap, and then before the swap occurs, we can kind of get the kind of filter for the best price, right? And then we batch this information, send it over to Across. Across bridges it to the chain that we've already specified, and then the swap is done, and the fund is sent to the user on the other chain. Like I said before, Across is great because it supports many chains, it's reliable, it is fast, which is the main issues for most bridges when it comes to cross-chain arbitrage. In the future, we intend to support more chains. We intend to bring this dApp to mainnet, and because we know how important it will be for users, people would actually want to use this. We also intend to also bring in an intuitive UI UX to it as well. So we are really looking forward to bringing this live for people to use. Thank you.
Amazing. Thank you so much. Love seeing hooks being used like this. I think one of the criticisms of, the L2 world we live in, multi-chain world and multi-dex world and multi-pool worlds and multi-hook worlds is the fragmented liquidity that comes with all of that. So approaches to sort of try to solve that and keep a consistent experience and, capture those opportunities. Always great to see that. Thank you so much. Cool. Okay, next up we have Sky for Sky Swap, and on deck will be Shivansh for Yield Matcha.
Okay. Okay. So can you guys see it?
Yep.
Okay, cool. So yeah, I'm Sky. So today I'm going to present SciSwap. And yeah, so we are DeFi, we are DGen since 2017. And yeah, we are proud to say that we are from Malaysia. And we also built YOLO protocol. And yeah, my partner Elvin will be presenting at later. Yeah. So yeah, and we also incubated by Base. So yeah, so what is SkySwap? So SkySwap is let me put it down first. Okay, SkySwap, we are actually innovating a swap that's deal with the impermanent losses and dynamic liquidity pack CLMMs. So what's the benefit of SkySwaps? We are actually gas efficient swaps because we are utilizing the easier mathematical solutions, and we using a system level hedge to eliminate the impermanent losses. And definitely we are introducing oracles to solve the liquidity concentrations. Yeah, to have the liquidity concentrations. So yes, we go to our white paper first. Okay, so this is our white paper. So yeah, so currently we are actually having a different model of the AMMs, like for Uniswap V2s, and there are stable swap invariants using the curve ones, and there are Uniswap V3 that allows the liquidity concentrations. Yeah, so in this white paper, we are going to introduce the Sky Swaps, and yeah, these are all the benefits. I've introduced it in the presentations. So so we are start with the maths first. So I think it's better that I start with this Desmos. Okay, so visualize what SkySwap is doing. So we have the CSMM here. So it's a constant sum curve. And then eventually, this one is the Uniswap V2 curve, the constant product curve. And then eventually, we can see that in here, there is the stable swap curve. So I will take out the Uniswap curve first to prevent the to prevent confusions. And then the last one will be I'll be activating the sky swaps. So using my formula, so it's an Oracle normalized invariance. So by introducing oracles, we make the liquidity more concentrated. And yeah, I think the capital efficiency will be around at X. And yeah, so I will briefly go through the how we come with the Oracle focus is okay. So this one we start with the stable swap invariance and refer to Bloomberg Exchange that actually introduced a simplified version of invariance to reduce costs and improve capital efficiencies using these methods. And definitely they are introducing the coverage ratios, which is the asset over liquidity coverage ratios, and eventually they obtain the invariance. And in SkySwap, we are actually introducing these oracles. So eventually we get these formulas, and then we substitute it into the Bloomberg Exchange enhanced simplified invariance curve. Eventually we get this. And yeah, we can safely assume that the asset and the liquidity is always one because we are actually doing rebalancings at the protocol levels and make sure that the asset and collateral LTV is always 50%. And that is how we eliminate the impermanent losses. Yeah, and yeah, this is the Desmos links. Yeah, so I will go into details like how we solve the impermanent losses via the protocol level hedgings. So let's say a supplier volatile assets worth of 100,000 as collaterals. Eventually, the protocol will means the USYC, 100,000 of USYC against this deposit asset, the 100,000 ETH. But currently, this is 100% LTV, right? So this is not legit. So definitely, we need to form the 100,000 of ETH and the 100,000 of USYC into an LP as a collaterals, and eventually we borrow 100,000 USYC again to repay back the first USYC loans. So at the end of the process, the user holds 100,000 of USYC in debt, but the protocol holds 200,000 of the LP token as collaterals. So yeah, the resulting effective LTV is definitely 50%. So by this, we prevent the liquidation issues. So yeah, besides, since we are actually dealing with the USYC, so definitely we have the single-sided liquidity. User just need to supply their ETH or HYPE to our AMM, and definitely we'll match it and yeah, as a collaterals to borrow the USYC to our pool. And then the rest will be the swap mechanisms involved. So yeah, I'll be going details into this one. Definitely, yeah, feel free to go to the white paper and look through this. Yeah, and this is a very early stage versions, and this is our planned expansions. And yeah, we plan to integrate it with detector projects. Yeah, we are not revealing now. And also we try to reduce the Oracle dependencies because we introduced the oracles for the concentrated liquidity parts. So yeah, we need to reduce the Oracle dependencies to prevent if anything's oracles having any issues, yeah, that causes liquidations. And definitely we need to introduce some mechanisms like dynamic fee structures. And also we are thinking of, is there any protections that we can use to protect the LTV-based system level collaterals, which is the 50% LTV. Definitely, we need more back testing and simulation for our performance. And lastly, to become a protocols, we need to have some good emissions method. We're actually thinking to use the yield basis, yeah, to inspire by the yield basis one. So yeah, it's the last one. Yeah, definitely we are raising for our seed round and also opening for our co-authors. So yeah, also seeking for partnership. So if you guys review the white papers, and yeah, feel free to contact me. And yeah, this is my TG and this is my Twitter account. Thank you.
Amazing. Thank you so much. Very, very interesting custom price curve stuff going on. The Oracle here is doing a lot of heavyweight lifting. But yeah, like I think, as you mentioned, reducing the dependence on that a little bit. There's ways to sort of explore that. But yeah, no, very, very cool approach, very interesting approach, assuming Oracle is okay. But okay, amazing. Love to see that. Cool. Next up, we have Shivansh from Yield Matcha, and on deck is Alvin from YOLO Protocol.
Hey everyone, so today I'm going to talk about a huge problem that I'm trying to solve with this hook. So currently, imagine this, you're providing liquidity to a volatile pool on Uniswap. You're earning fees, but there is a catch. So those fees are earned in the same volatile coin that can easily crash overnight. So we have seen tons of cases where LPs lose several million dollars in an instant. So this current process is very painful. You have to manually monitor your earnings, pay your gas fees to convert them, and hope that the market is right at the time you're converting. So, and the majority of the providers cite that fee volatility is their biggest concern, and it makes very unsustainable. So what I am trying to build as a solution, which is where Yield Matcha comes in. So Yield Matcha is the first automated fee to stable conversion in DeFi. So let me explain how it works. Every time you trade a volatile coin pool, the Uniswap hook intercepts the trading fees in real time. So instead of collecting those volatile tokens, I can automatically route those fees through an intelligent swap mechanism that converts them into stable coins such as USDC. But the true innovation here is that I have implemented a time-weighted distribution. So let's say if you're providing liquidity for twice as long as someone else, you would win proportionally more rewards. So this creates a sustainable economics and reward mechanism. And the result is that the LPs will finally get to see what they always wanted, a predictable, stable income, even in volatile markets and without any manual intervention. So for implementation, this project was possible by the amazing UHI sponsors, Flaunch and Circle. So I have built this Uniswap hook on top of Flaunch, and Flaunch provides an internal swap pool, which is very efficient for fee conversion, and Circle is used is implemented through programmable wallets. I can automate the USDC treasury, and the paymaster also enables gasless reward claiming for a better UX. And through CCTP, I can also do cross-chain reward distribution. So right now I don't have a front end ready, but I can talk about the market opportunities that it creates. So the opportunities are endless: protocols, DAOs, launchpads. Everyone needs programmable automated rewards. And in future, it could extend to any stable coin ecosystem, so not just limited to USDC. So yeah, it's about me. I am a founding engineer at Labyrinth. When I'm not playing around with Uniswap hooks, I am building a compliant ZK privacy on EVM. If you want to reach out to me about the project, here are my socials. So thank you for uh, staying at my presentation. Yeah.
Amazing. Thank you so much. I love this project. I think, first of all, the composability of hooks, like building a hook that is on top of Launch, which is also a hook. I'd love to just see that happen. But more interestingly, I think love sort of the design. I think would love to actually see this expand and grow out afterwards. I think there's a lot of potential for this going forward. But awesome. Thank you so much for the presentation. Next up, we have Alvin from YOLO Protocol, and on deck, Anthony for pass-through.
Hello, GM. Thank you, Hardik. Can you see my screen?
Yep.
All right, guys, super honored to be here to share with you YOLO Protocol, a protocol that I like to call it the ultimate hook for DeFi degens. So what does YOLO Protocol do? As a one-liner, you can understand us as a modular DeFi engine that combines several important functionalities, including the functionality of MakerDAO, plus synthetics of Mirror Protocol, if someone has played with Mirror Protocol before, plus a gearbox inside Uniswap before, natively. So yeah, this is me and my friend, my partner. This is not the real photo, but it's a degen spirit embodiment of us. So as co-founders, actually, we are long-time DeFi users and we are devs ourselves. We have tried all sorts of DeFi protocols that maybe you can imagine maybe from the early days, WireEarn, Pancake, Sushi, to something like Olympus DAO, VE33, and also something like Beefy and Pendle, Gearbox, Contango. We tried all sorts of DeFi protocol. So as DeFi degens ourselves, so these are the two problems that always haunt us. How do we actually maximize our back yield? First thing. And second thing is when we read the news, let's say something about there's a war happening, or maybe there's something that will make the oil prices shoot up. How do we quickly aid in beyond crypto? Maybe something like gold, crude oil, shares. So what if we are able to trade shares or commodities or currency directly in Uniswap? And the catch is without the need to provide liquidity before we do the trade, which means that basically we are liquidity-less. And if there's something like this, we will probably never miss a trade like this. If let's say Trump suddenly tweets something, all of my assets are on chain. I can directly execute the trade. Maybe I will buy synthetic and NVIDIA share directly inside Uniswap. We make this possible. And secondly, even better, what if not only we can buy the shares, but we are able to trade it with 100x leverage? So as a true spirit degen, what we believe our motto is either go big or go home, and just go work at McDonald's if we fail. So the third thing is that we as heavy DeFi degens ourselves, we hold a huge bags of LP tokens. Can be something like Pendle, BFLP, Curve LP, Convex, and how do we unleash the liquidity of these LPs? And even better, how do we leverage and loop it up to 20x? YOLO Protocol made it possible with our stable coin that actually packs inside the hook itself. So yep, fear not, YOLO Protocol is here for you to address all of your degen concerns. So let me introduce the architecture of YOLO Protocol. The first part of it is very interesting. The YOLO Protocol itself manages this is something similar to how maybe a CDP stablecoin or something like a synthetic asset, how it works. So basically, the YOLO hook itself functions as a minter and burner of different types of synthetic assets, be it shares, currencies, commodities. You can create any type of shares as long as there's a reliable oracle, and it manages the whitelisted collaterals and also user positions and interest accruing. The second part is quite interesting and only can be made possible with Uniswap v4. So YOLO hooks up to the pool manager itself, and if you look at here, the entire ecosystem actually just we just need one liquidity, which is what you call it, the anchor pool. So the YOLO USD were minted by users by providing collateral, and it will be natively hooked up to USDC upon the creation inside the constructor of the YOLO hook itself. And we actually recreated a math based on solidly stable math, which is x power 3 times y plus y power 3 times x equals to k. So of course, this is easier to implement, and it's not as flexible as curve maths, and the slippage might be slightly higher. It's a stable math with slightly higher, but it actually creates room for people to arbitrage it, which will fulfill the flywheel to make our liquidity even more stronger. So all other asset classes that were created via this part will be actually natively hooked up to USY. And the swap between USY and these assets all are Oracle based. Thanks to the before swap, when it's a swap between synthetic assets, we just make it minting and burning via Oracle price. So yep, we don't need any liquidity, and something like YOLO Euro and YOLO JPY, YOLO Tesla, YOLO Gold will be natively swappable inside Uniswap itself. So we also integrated with Circle's USYC for rehypothecation. So imagine that this pool itself, the USDC doesn't just sit still, it will be generating yield with Circle's integration. Okay, so there's a bridge. We have Tesla with Server Matters. We have Tesla with Across as well. So this bridge allows us to create YOLO synthetic assets, which are not limited to one chain. It's natively omni-chain. And this is something planned in future. We wanted to create a stability module whereby, so the original plan is that USY and USDC will be on peg based on natural arbitration. But we will also create a stability module whereby liquidation yield that comes from liquidated users' positions will be stored inside the vault. And whenever USY and USDC were off-pegged, either USY will overpriced or underpriced, if user or third party, they will buy or sell and make the pool back to pack, they will actually be rewarded. They will be able to stream the yield from this stability module. This is only made possible by the before swap and after swap of the Uniswap v4 architecture. So yep, this is YOLO Oracle. So our architecture is a little bit similar to Aave's Oracle, just that for the YOLO Oracle, we have something planned ahead. We wanted to have a more real-time based Oracle. So we are thinking to try out EigenLayer. Unfortunately, we haven't had time to actually code the EigenLayer thing out, but we actually have a plan to create a hybrid oracle whereby it wraps over traditional oracle, plus there's a function for AVSs to update the oracle price trustlessly and in a decentralized manner. So another layer is a leverage layer, whereby we allow people to execute leverage loop and also leverage trading positions with a counter liquidity pool. So the detailed architecture is actually at the below URL. Feel free to have a look. So I would like to talk a little bit about the market opportunities, but put it this way, instead of telling you how big the market is, I would like to invite you to look at how big these companies are in the industry. So these are all CFD trading companies that allow users to trade with leverage. Can be 20x, 100x, or 500x on currencies. All of them are actually making a huge profit, and some of them are listed. Many of them wasn't, but they are making their profit is in the range of hundreds of millions. So what we're actually doing is we aim to become the Web3 native version of these Web2 CFD trading companies. We want to replicate their success and bring it on chain. And this is our vision. So just a quick introduction. We're actually raising. We are super excited about YOLO, as we are actually building something that we always wanted to use ourselves, and we finally managed to build it up with Uniswap V4. We are seeking to raise around 1 million at a very fairly priced valuation, less than 10. We are open for discussion with an token as equity deal. So we have some future plans. Actually, we have many things to implement, including we need to beautify the front end, where the leverage components and also the stability module needs to be coded out. But with the future, so after while we are doing that, we actually hope to close our pre-seed or angel round, expand our team, and audit our contracts and do our go-to-market effort. So as a side note, we actually won a higher hackathon with a more nascent version of this project in base, and I want to thank Atrium and Uniswap Foundation, especially Hardik and SourcePoint for your office hours. That you taught us a lot, and that makes us possible to win the previous hackathon. So thank you so much for having us. We are honored and look forward to work together with you guys. Thanks.
Amazing. Thank you so much. This is such a good project. The only thing I want from you now, Alvin, is also allow pre-market convertible notes. So, because Robinhood isn't available in Canada, and I want OpenAI.
Sure. No problem. You can do that.
Amazing. Perfect. Okay. And last up, we have Anthony from OriginateX/Passthrough Protocol.
Okay, can you hear me?
Yep.
All right, great. So welcome to OriginateX Pass-Through Protocol. It's a decentralized mortgage marketplace, origination and servicing platform, and decentralized mortgage-backed securities DEX. So we are live. And let's start out with a question. Does anyone here think the housing crisis isn't an issue? Rhetorical question. The fact that we've called it a crisis for what feels like half my life, it implies there's something to be done about this. So how bad is it really? Housing is the most expensive in human history. If you were to get a mortgage just 5 years ago, there's a good chance if you tried to get that same mortgage, say on the house you've been living in for half a decade, you wouldn't be able to do it. So pretty big. It's a sign the market's locked, right? There needs to be some innovation. There are some tailwinds we have in regards to this problem. Recently, regulators ordered Fannie and Freddie to consider crypto holdings in their mortgage loan assessments, right? For that sort of thing. And also the TradFi to UX tech for plumbing, like, compliance and onboarding users from their TradFi payment methods into Web3 native vaults, like stable coins, it is seeming to be pretty mature now with Stripe and Circle. Something else, just like geopolitical, Aswath the Motoran is like valuation expert. Usually if he says something, you could take it as being pretty serious, right? So he signaled, this could be a slippery slope where, the risk-free rate might be at risk in the US. And so if that were the case, we actually would need, some sort of mechanism to have global permissionless competition in order for the mortgage market to function at all, right? So what are the key problems here? We have housing costs, right? We need obligors, need mortgages at better rates. We have investing access. So right now it's limited to legacy incumbent institutions. It's geographically limited. It's very opaque to the point where, they can do very sketchy things that can cause, the 2008 financial meltdown and neoliberalism. And also structurally, when we talk about the process of, it's not just the origination, it's the securitization. Very inefficient using, tech from the 80s, 30 to 90-day settlement cycles. It's designed to reduce competition and access, right? So a lot of fees involved in there as well. So that led us to this question of, we want a mortgage. We don't care where the money comes from. What if we could fund our mortgage through a party round or international institutions? And that's where the idea for OriginateX plus pass-through protocol came from. So first, it allows people to get mortgages directly, lenders to get access to previously opaque markets, all-in-one origination and servicing platform, just by the nature of the, being able to do everything with smart contracts. And then a decentralized mortgage-backed security DEX. So this is what enables global competition and allows investors to sell or lend the principal yield on the tokens they receive for the investments they make. So the platform has a lot of different user types. I just put some screenshots here. This is from our live app. The first step is origination. So someone will go apply for a mortgage the same way they would in TradFi, and there will be an underwriter there to use the same criteria they have now to make a decision. The only difference is when they agree, both parties agree, hey, we want to move forward and fund this, it gets minted on the platform, right? And then individuals or institutions can come fund these mortgages, and in return, they get back their mortgage-backed securities tokens, and they can trade the yield and whatnot. Servicing, we have a way to create the pools, add the fully funded mortgages to them, and issue them for trading. And then, of course, the trading platform itself, which is where, the investors who funded these are given their share, and they can trade right on the platform. I just want to mention our partners, Circle and EigenLayer. We ran out of time to experiment with EigenDA, but we were looking at that. Circle Compliance Engine, very simple. The code will look something like this. Team was just me. I have people I work with. They didn't have bandwidth for a hackathon, but yeah, big finance and CS nerd. Have worked at FinTech, YC FinTechs before as founding engineer. Next steps. Yeah, so servicing is the most complicated part, right? You still need something to interact with the real world intermediaries, deed, county, title companies, appraisal companies, all that sort of stuff. So that'll probably take the longest and cost the most money to get up and running. A lot of other things that need to happen here. I usually don't mention the TAM, but in this particular instance for this idea, the TAM actually is measured in trillions for this market. So pretty interesting. And yeah, that's the end. I have a diagram here. I could not figure out how to get it onto slides. So you have your 6 different user types here, and then you can sort of go through all this. That's how the protocol works. Yeah, that's it.
Amazing. Thank you so much. This is so good. And I can't wait for this to become a reality, because it's going to be a lot easier than trying to explain to TradFi why I want my mortgage collateralized with Trump and Joe Biden meme coins. But
well, they're telling us to do it now, so.
No, I love it. That's amazing. Thank you so much. Cool. I think that is all the presentations for today. I'll hand it back to Bamik. Take it over from here.
Great. Thank you, Hardik. I am going to share my screen. Is it full screen now?
Yep.
Okay. So great job, everyone who presented. As I mentioned earlier, we are going to write a recap version of like a blog post, a Twitter thread, and we'll publish these demos as well sometime next week. So stay tuned for more on that. I want to give another shout out to all the projects that had been submitted in this hookathon. You can access them at hooks.atrium.academy. Worth playing around with all the other projects submitted in UHI5. There's a filter at the top where you can filter by that. And also, a teaser, we are planning to ship something new, a different way of organizing the design space for hooks, and it should be out by our next demo day. But a little teaser there. Okay, so now is the time to get into revealing the prizes. So what we're gonna do, or first I want to explain the process here. So there are uh, 5 different sponsors who contributed towards the prize pool, and we gave them a list of the hooks that integrated their technology, and did some vetting, like did you actually incorporate Circle or Eigenlayer, or did you just say you did? They obviously vetted that themselves as well, and then they determined who they thought were the top projects, and kind of allocated the prize pool. And so I'll start with those sponsor prizes. One thing I do want to note is that we are planning to tweet out the announcements at the exact same time. So you'll see us do that as well. And I think Taylor might drop a link in Twitter when we do that. So excited to celebrate on social. But without further ado, let's start with Eigenlayer. So congratulations to these 4 teams for winning the Eigenlayer Hookathon prize. Vansh and Rahul for front run this, Yash for trade battle, Diego for debit hook, and Deepak for Eigen LVR. I'm glad that one passed the test of did you incorporate Eigen. Yeah, we have just announced this prize on social, and very excited to share it and kind of get everyone their prize money and keep building. And shout out to Wes Floyd for being great speaker and judging those projects. Next up, we have Circle. Crazy year for Circle. They had time to sponsor a hookathon alongside their IPO. And shout out to these 4 teams. Term Structure, AMM, that was Miguel, Roberto, and Alberto. YOLO Particle with Alvin. Sky Swap, and Sky. And then Pay with USDC with Amity Club. I hope I'm pronouncing that right. So big shout out to these teams, and Circle had kind of very collaborative effort. They had multiple people involved in the judging, and I'm glad to see the projects that were built, and congratulations to these devs. Next up, we have Inc. Shout out to Bobby for on their end for judging the projects and helping initiate this, and Ian for the talk. The winners are YOLO Protocol, which, spoiler, you're gonna see more of that. So shout out Alvin, and KV Hook, who's Daniel, for winning the Inc. prize. And then 2 more across. Oops, sorry, early leak, but shout out to Alvin for Yellow Protocol, for Noza for chain gas price optimization, Itiliwoki for smart hook, and Alejandro for ramp hook. Ganesht was one of the most involved DevRel people that have been involved, so huge shout out to him as well for all the engagement and answering questions. He was an immense help for everyone in the project. Okay, and then our final sponsor before we do Atrium UF is Flaunch. It's been really exciting to see Flaunch come back as a sponsor, and as some of you may have seen, Tom at Flaunch, who is part of UHI1 and is a lead protocol engineer, will be taking the reins for UHI instructor going forward. So he was involved obviously in the talk and in the judging for this cohort. And so, yeah, very excited to see these 3 projects. Flaunch Lazy LP by Fenrir, YOLO Protocol Alvin, and then Loco Block, who built Blueprint. So congratulations to these teams. And then before I get to the last one, which is HMUF, so our process from here was then factoring in these prizes and judging from both Hardik, from UF, and kind of multiple sources there. We then factored in the Atrium Prize and Uniswap Foundation Prize, and there's a bunch of teams here. So there's two images. So first up, LP Hub with Kevin and Killian. Congratulations. Anthony just presented with Originate and Pass-Through Protocol. Front run this again with Vansh and Rahul. Yield Matcha with Shivans. Second slide. YOLO Protocol is back with Alvin. Uniswap Gas Station with Sai. Crab Swap with Kemi and Adewala. And then term structure, Miguel, Roberto, and Alberto. And then SkySwap as well. So very excited to share and celebrate all of you all who have won a prize today. Congratulations for all your hard work. We'll follow up next week with information on the actual prize dispersal. So stay tuned for Discord message there in a channel. But again, congratulations to everyone who participated in this cohort. As I mentioned in the beginning, there is a lot that is going to come up in what I'm sharing with all the alumni on different initiatives and ways to get involved. If you're excited about your project, keep building. We are here to support you, and we'll be reaching out to the cohort overall and to some of these teams that we just gave prizes to see how we can even work, help you more one-on-one with more guidance and mentorship. And then finally, I have to end with the plug. But if you know someone who wants to build a hook and you had a great experience, Sunday is the deadline, and the next cohort starts very soon on the 17th. So if you had a great experience, please refer them. And if you graduated, you are eligible to join the next hookathon. We will send you the dates. It'll be approximately 2 months from now, but we'll send you dates to get to join that. But I'm going to end on this slide that we had before again with congratulations and thank you for joining us today at this demo day. And we'll share more about this on social. Maybe we can do an unmute final clap like Hardik's idea. So thank you to everyone, and we can end with the clap.
Yo,
Amazing
let's
work,
go.
everyone.
I don't know if my mic is picking it
Nice,
up.
nice,
Let's go,
nice.
guys.
Let's go.
Congrats, y'all.
Let's go.
Congrats.